All right. So welcome to Game Plan Sunday. Today is January 30, 2022. Had a pretty interesting week last week, kicking off with the Fed's FOMC minutes meeting. Basically, we didn't really get much of anything that we already didn't know from the Fed's meeting. So I believe that everything was pretty much priced in from all the action that we saw last week. But basically, the Feds are still talking about raising rates, possibly raising rates in March. And tapering off the balance sheet, which is yet to we're still yet to see what they're going to do with all of that. And so everything else ahead of that meeting was already priced in because nobody was expecting any changes in this meeting. So what all the markets are expecting is all the changes to take place in March. So we got to keep that in mind and see what the Feds are going to do. Now we have been seeing the market selling off, pretty crazy, leading up into this news. And so, the question to me is, are we going to have like a repeat of what happened in 2019 when, the market started puking up and ended up forcing the Feds to capitulate its, rate hikes under Trump, where they had to stop that and put it on pause and then start cutting rates the following year. So I think that it's highly probable for us to see a situation like that where maybe the Feds can get one of those rates, rate increases off possibly in March. But I think that once they, really commit to this view, the markets is going to throw it up and it's going to force them to capitulate. Talking about the markets here, just review from last week. We did have some positive numbers in oil. And if you track oil tracks inflation. So as oil goes up, inflation is going up as well. 2.90% on oil. Bitcoin saw a nice little bit, 2.85%. They've been bleeding, so they're trying to come back a little bit. The dollar was up 1.65%, which is really interesting. The Dow Jones was up slightly as well, 1.34%. The S&P 500 was up slightly, 0.77%. And the Nasdaq was barely up 0.01%. The Russell 2000 was down negative 0.98%. And gold down negative 2.39%. And that's coming off of a nice little bump it had the prior week, and then you end up losing it back this week. So very interesting development in gold. Moving along to the sectors here, we had the energy sector up 5.09%. So energy was leading the way. Technology stocks was up 2.38%. And financials was up 1.36%. Healthcare slightly up 0.78%. And communications was up slightly 0.12%. Everything else is in the red. That's the real estate, consumer staples, materials, utilities, and consumer discretionary and industrial. So everything down there was all in the red. And so that's how we fared off last week. Didn't have much to report on the news feed. This was an interesting post here. Had to share it because it was just ridiculous. We talked about Kathy Woods for a while back here. And so anyway, this was a post that I saw. I was like, man, let me share this. This is messed up. It says, rich MILF gambles all her money on unprofitable growth stocks, gets pounded hard by the Fed. And then they got the hub right there. That's very disrespectful. But, that's the internet world, man. People are, bananas these days. But yeah, she's definitely getting it hard right now. Just crazy focus. Her investment style, was proven profitable for her in the midst of the bubble, which, that's how bubbles go. And then as we see it looks like the bubble is starting to deflate right now. And she's getting this, she's getting the stiffy. So it's interesting because I always thought like she's kind of like a, witch, if you will. She adds like metaphysical stuff in her investment analysis, and she'd be talking about spiritual stuff. I don't know. She's kind of weird to me, but it looks like the stock market community is having fun with her right now. So I guess it's all good when you're making money. When you start losing money, you got to worry about, everybody, going off on you. We did get some site maintenance here on the website. So they want to go over some of the site maintenance stuff here with you guys so you can see some of a few little updates, just small little things that just give us a better experience in your activity feed, in your news feed. Now you guys can do a little more customizations with your messaging. So when you drop in a message right here in your news feed, you'll be able to actually just get a nice focus as I click on it just to give you a demonstration. Boom, it's a nice focus window in here. and just type in a little message. Welcome to Game Plan Sunday. If you go down here to this little icon here, it gives you some flexibility with the text where you can actually, add, some formatting here. We can actually, add some bold there. We can add some italics and things like that. You could drop a link in there. We could drop a bulleted point. Sunday at 7. Okay. You could do things like that. And then also you can tag someone. Let me just tag Topaz in there. Her name will just come up. I could tag her in the post. So if you're a member on the website, which is free for membership at Wallstreet.Jackboyz.com, then you'll be able to tag, someone else that's there. And you can now also add links in here. It's a little link button right here. You can just put the link right there. And I'll just put Wall Street Jackboyz just for the purpose of the demonstration. And bingo, they have a clickable link where they can go to whatever it is that you're posting. And you could drop a picture in here. You could drop a Jiffy, your emojis, et cetera, et cetera. So anyway, this is a nice little update. Just want to introduce that to you guys really quick. You could just post it as well. All right. And another thing is to keep in mind on the activity feed, if you're doing your homework, which I've seen a couple of members have been doing some homework over the past week, you can actually go right here in the news feed and search the news feed for anything you're looking at. You want to look at any articles that we have posted on about inflation, type it in there. Like, you're going to get the whole list of everything that's ever been posted about inflation. And that's if you have all updates there. If you look at likes, things that you like, you can also get that to update as well. So anyway, those some pretty cool little updates on the website, WallStreetJackboyz.com. I wanted to let you guys know about that. All right. So other questions there people have been asking, is right now a good time to buy a home right now? And so anytime someone asks that, of course, I don't give any advice, but if I can lead you into the right direction, always, remember the basic principles of investing. It's all about buying low and selling high. So you have to just ask yourself, are you buying at a low and then later you'll be able to sell it at a high? You have to ask yourself that kind of question there to really get that answer. When you take a look at home prices, are you looking at historically record highs, like the highest, prices ever? And so, we're seeing crazy inflation in the housing market, which is inflated this crazy bubble. We have all kind of real estate professionals that's even admitting, it's so crazy that you can't ignore it right now. So yeah, we're in like a mega bubble. The bubble is worse than it was in, the great financial crisis in 2008. So we have a bigger bubble now. And so with the interest rates increasing and the highs they've been in the past 2 years, still historically low, but they're still spiked higher and they're not going back lower. So you missed your opportunity if you didn't buy in the past 2 years, basically, with those rates. And we're not going back to those low rates. Now, Fed's talking about raising rates. And so that's another thing here. So if the Feds raise rates, that's really going to just, destroy, all of that. I believe that we'll have, a massive recession and likely to even go into a depression, actually, which we're yet to see. But just keep that in mind. The market's always moving ahead. And so you can see just from this little mini map how high the 30-year rate is right here. A little peak right there, we can see it's right here. So you might get some little ebbs and flows, little points here, a couple basis points on a daily basis where it may dip down and dip back up. But overall, rates are higher. And this is all designed to also cool off a hot economy. So people who were at one point of time able to qualify at the lower end of the spectrum, when those rates raise up, they were no longer qualified. So those people get knocked out of the markets as well. So again, all of that's designed to cool off a, crazy hot economy. The question is, the rates they're talking about raising, is it going to be enough to cool off, over 7% inflation, according to the Fed numbers? The real numbers are likely above 10% with inflation. So, really, you're going to need to raise interest rates by that much. But obviously, the Feds would not be able to do such a thing. And so they're likely to continue, just to bring rates back to zero. If they bump them up by, 25 basis points or what have you, we'll be able to see. So again, all the markets will be moving towards all this information and the economy as well. So just keep that in mind, you guys. I'm going to take us over to the charts real quick. Here go to VIX. Just starting off with the VIX. The VIX is the fear indicator. Super, super scary. A lot of these markers here have been charted on my charts for a while, haven't changed it. It just stays there because these levels have proven to be true. And so anyhow, the VIX, what you don't want to see on the VIX is spikes higher. That is bad for the market. So when you see it spike up, like, any times like this, you get the sell-offs, all right? That's just letting you know market selling off, fear indicator, all right? And so the past few weeks, we got that boom, like all the way up there. And so now we're back to the mean, coming back to the mean like right here, but we're still super elevated, okay? Now, typically, as you guys can see every time in the past, whenever it's spike high like that, you do get that comeback, all right? So you normally get that little comeback. And so, we'll have to see because it's still, above the mean, but we do have indicators like, this here, okay? That's telling us that the momentum should be coming down, all right? That should be give a relief to the markets somewhat. And so then the expectation would be for price to come underneath the mean. However, if it doesn't, then, we're going to chop around this area to going up higher. And all of that means sell off for the market to continue. All right. So anytime you got a VIX that's super hot like this, you want to stay out of the markets because you're going to get your head bit off. If you're day trading, that would be, an environment that you can, really get your thing popping off in. But if you're someone that's trying to swing trade, yeah, you're going to get messed up in this. So patience is a position. Just keep that in mind. You need to let that VIX come down some before you step back in this thing, unless you can keep your eyes on the markets. So I'm going to move over to the indices. Let's take a look at the S&P 500. All right, and this is an interesting print on the S&P 500. I'm going to just expand this here a little bit. I do have the targets from last year still posted on my chart here. But what's interesting about this setup is that this is a very, very tricky setup. As you guys can see, we made it up to this high here. Okay, we made it up to this high and we've been selling off ever since. Now we came through the floors. We breached all of the floors. The 200 moving average was a major key support area. And so that floor was breached. All right, price has come underneath. And then price has been trapped underneath this floor, which is now resistance. Okay. So when investors are taking a look at, this type of correction from this level to this level, they're thinking about, hey, this is discounted prices. So this is a good time to buy. What's interesting about this situation is that this could very well be a trap, which, to me kind of looks like a trap. I understand that, it's in the oversold territory. If we take a look at, the momentum down here, oversold, we see the momentum trying to shift back upwards. But the key thing is that price got to come above this 200 moving average. Okay, this is a major resistance level. And the question is, can price, get back above that, or do we continue to chop around here? Okay, as we usher in a new, bull market. Okay, this is very possible. This print is consistent across the market as well. And so again, this 200 moving average right there, this could be, again, it could be a trap where everybody starts to buy the so-called dip. And then you get your hopes and dreams, shattered as you become a casualty in this situation. And you could be looking at some type of bear flag, forming. So I would advise, again, I don't give advice, but for me, I'm moving with caution. And so I'm only interested in pretty much day trading at this point. Shorts, a little more committed to the short side. We saw some good action past 2 weeks on the short side, actually the past month. But yeah, so on the short side, a little more committed to that as of right now. So definitely should be able to get some good plays. Let's take a look at the Nasdaq. All right, same kind of situation. You had that double top pop, right? Two tops right there. Boom, breach the floor, and then it pushed even further, and then it's trying to hold. It's pushing back up to the mean right here. You got to see how that's going to all play out. And again, it's looking like sucker money to me. I can't really call it yet because we haven't cleared this level of resistance to come back up. Either way, it is still sucker and some dumb money type situation, if you ask me. Smart money is going to get sucked up too, because again, this is looking, like discounted prices. And so when the market see these discounted prices, they start to move towards it. For instance, I mean, you had last week. Even Topaz posted it on the activity feed about Bill Ackman, who, posting that he, bought over 3 million shares of Netflix. Let's take a look at it. All right, so you see a situation like Netflix here that was once trading at over $700. All right, and then it gets a price correction all the way down, $350. That's a 50%, correction right there, right? So with a huge discount like this, and then you get a superstar, like Bill Ackman, who's the Wall Street golden boy, who comes in and announces to the world what he's doing. So I'm buying a bunch of, Netflix. So, he's already in here, and perhaps he's trying to pump this stock to come up some, because all he needs is just like, a little nice gain so he can get out of it. I'm not too sure, but it sounds a little bit like he's kind of pumping a little bit. But you'll start to see money start to come in. So money's coming in here right now. I don't think it's ready to pop yet. If it does pop, it is very well could see more pain to come. But it is at a very attractive price. But again, if we're heading to bear market territory, this ain't going to be good enough. Okay, so still want to tread softly and don't, run after every news story out there, because, these guys, they're investing in different ways that you and I cannot. But again, Netflix looks pretty good. I think it's going to chop sideways in here a little bit. I doubt if we see a pop up like that. And if we do, it'll be short lived. All right. We saw a very similar situation in Alibaba. And we saw a very similar situation in Alibaba back when, who was it? Charlie Munger was talking about, he bought some, or they did an interview, and basically he went and bought into it. I think it was Charlie Munger. Maybe it wasn't Charlie Munger. Maybe it was Jim Rogers, who actually bought into it. And I believe this was back here in this time frame when he did that. Oh, it could have been further back. Could have been. Anyway, I think it was back here. Got a nice little pump up right into resistance. And as you can see, it's coming back down further. All right. So tricky situations with that. Make sure you do your homework. All right. And then let me just take a look here at gold. And so here's the tricky situation with gold. As you see that it's chopping sideways. Again, these levels are old, but they're still holding true. And we can see back here that 786 was a level that the price action behaved towards. And we could see like the breadth of gold started to narrow in as we came up against this this level here, right in the middle. And it got rejected back here, did another rejection right here, and then it blew through. All right. So to me, the question was, are we going to come back up to this level? We actually never made it back. Gold ended up returning the gains, and it's looking just like it looked, once it comes underneath the mean, which is like this level here. And then we got a sell arrow right there. But every time it does that, right? If you go back right here, it did it here, it did it here, it did it here. Okay. And now it's doing the same thing here as we get underneath that. And so the way it's kind of like curving and then comes back down, I think we have a situation like this with gold. Gold is in a very, tough position because of the positioning of the Feds, and the markets, investors are trying to interpret, what is actually going to take place. Are they really going to raise rates, what have you? And if the markets got this wrong, then this would be a great, buying opportunity for those in gold. Again, physical gold, if you are buying gold, that's the best route to go. Because, these paper prices are, manipulated, and you can see how the markets they still haven't gotten it. The market's been wrong for over a year about inflation. Inflation is as hot as it's ever been in the past almost 40 years, and gold still hasn't popped yet. So there's something going wrong here. But the big boys, you already know, they're stacking. They're not selling. They're not holding, like the Bitcoin players. Speaking of Bitcoin, let's talk about it. All right, so Bitcoin has been selling off crazy as well. And this line that I had here, last time I talked about it, I was saying how this is a floor level in here. We got that crazy sell off in Bitcoin down here. That floor, which is the 2618, actually has been holding true. And this is going to be interesting. So right now is, I believe, a good area for, if there's any money that's, believing in Bitcoin, then it needs to be getting in now. And it doesn't, Bitcoin don't want to lose this level here, because then confidence is going to lead with it. So ideally what you'll want to see in this will be for it to, rally past this level here. It is in the oversold territory, so that's something that likely can happen, or it might not. All right, we got some spooky money out here, spooky money. Money's kind of scary. We can see Bitcoin come right up into the mean, sell right back off, and that's what's doing, is coming back into the mean. And so it can get rejected here the same way as it's done every other time in the past. So it's going to be important for Bitcoin to breach this level higher through this resistance if it wants to have a chance. Or you're going to be seeing, down to $30,000 levels. So that's my thoughts on Bitcoin. And let's take a look at oil. All right, so oil stocks have been rocking. And I know I used to have an $80 target on oil, and we clearly blew through that. And there were, years ago, 2 years ago, they were talking about, when I say they, investment community was talking about $100 a barrel oil. And I was like, wow, if you go back on the charts here, we were way back, around $40, $50 when they were talking about, $100 oil. And so I had these targets here for a little while, and I was just like, oh, well, that must have been over, because we never got anywhere close to it. But as you can see now, we're actually really, really close to that $100 target on oil. And the thing that's crazy about oil is that as oil goes higher, so does inflation. So this is just a quick proxy for you to take a look at, this, and that just let you know everything you need to know about inflation. Okay. So anyway, we can see how it rallied back up, super strong. We've breached through these ceilings here. We are above $85. We're at $87, almost $88. And so it is in an overbought territory. So I don't want to be a buyer at these highs. However, I think we can still melt away. I think we can melt up even higher, up into, the $90 target, which would be the next target, then 95, and then you get that 100. And that's all highly likely as we get into the summertime. So yeah, that's oil. Oil stocks have been rocking as well. So anyhow, that looks pretty interesting. So keep your eyes on that as well. Ron came through with some good plays. I don't know if you guys have been in the chat room on the website with these cruise stocks like Royal Caribbean. This has been a crazy nice short in here. And yes, I was playing it as well. When you see a good setup, you got to play it. You got to make it do what it do. So you can see that wedge pop off right there. And this is a bearish pattern where it gets rejected, and boom, you sell off short, right? So you got a squeeze in here, short squeeze. That's pain, more pain headed into earnings. All right, you can see that right there. So, there's still some, again, the pattern is still present. So I think there's still some opportunities here. And you can take a look at the Carnival Cruise as well. Same type of situation. You see the same pattern. All right, this is present all the way through. So I think these were presenting some short opportunities. All right. Yeah, Carnival and all of that. So yeah, I think those are still presenting short opportunities for you guys out there. You taking a look at that. And let me actually go to the earnings, because Topaz did post those earnings in here. Coming up, again, we're in earnings season. So a lot of talks in the markets is going to be based off of these companies' earnings and the outlook going forward. Starting off on Monday, not too many names out here that's going to be moving the markets. But Tuesday is where you get more action. We got ExxonMobil, we got AMD, we got UPS, we got PayPal, we have Alphabet, which is Google, we have GM, we have Starbucks, Gilead. There's some big boy names. We got EA as well. And I'm a Battlefield game player, so I definitely want to check out what's happening with EA and what they're going to do with this game. Other than that, Wednesday, we have AbbVie, we have Facebook, which is now Meta, DR Horton, Qualcomm, Spotify, Waste Management, Marathon Petroleum, T-Mobile, Suncor, Thermo Fisher, some good names right there. on Wednesday. Thursday, we have Nokia. Man, people still trading that? Yes. We have Amazon. We have Ford, Merck, Snap, Pinterest, Eli Lilly, Activision Blizzard. Interested in that too, because I play the Call of Duty with the kids. Honeywell, Estee Lauder, Shell. All right. And then Friday, we have Bristol Myers, Regeneron, CBOE, Royal Caribbean. Okay, so I mean, those are pretty much, in Aon, those are pretty much the names there. So pretty much what I'm seeing here, just, you pull back, is that Tuesday is going to be action packed. Wednesday is going to give us some nice little action as well. And then Thursday, so midweek, all of this is going to be like where all the action is going to be at Tuesday, Wednesday, and Thursday. All right, so that's on the earnings calendar. And then also you guys can check out upcoming events right here on the calendar. It's always here on the side. And if you're looking on your mobile device or your phone, all you have to do is just pivot your camera sideways and your phone sideways, and then it's going to actually show you the upcoming events. Normally on the phone, it just shows you the activity feed. Let me just get off this Kathy Woods post here because people might think we're advertising something else. So anyway, just take a look. You can just click on view calendar here to see everything that's coming down the pipeline here, or you can hit events. We can see clearly right here that we got some ISM data that's going to be coming the first week of February. So again, we're looking at the first week of February, the ISM manufacturing numbers on the first, the servicing numbers and the hospital numbers, which we don't really care much about that. But those are going to be the numbers there. But again, you can view calendar or you can go to events and you'll be able to check this out, like what's coming down the pipeline. All right. And I like to look at it from the monthly view. So I'm going to just switch it to month just so I can see a little ahead of time. And there we go. All right. And so we can see coming up this week, these are the main important factors here is the ISM data. So this is going to give us a little more feed on inflation. Okay. Coming into next week. So again, the story's the same. Inflation is hot. Inflation is going to continue to be hot until the Fed until they start to, raise the rates. That's what it's going to be. So, other than that, man, I think we're going to call it a night here, make it a short session. But definitely want to appreciate you guys' support. If you know anybody that, find, value into any of this market information that we kick every day, bring them on over to the website, send them an invitation. They can join for free. You can get the training if you want. It's lots of other things that we offer here, but definitely appreciate your time. And again, I'll be right here on the chat room every day with the squad right here. You guys can check it out every day. So with that being said, we'll call it a night. Catch you guys in the markets tomorrow. Peace.